All right, guys, welcome back to Wolf. It's great to have you all here. Excited to be chatting with Paul Marinko, Chief Revenue Officer at ThemesETFs. He's built a great reputation, been in the industry for a long time, talking about some really interesting ETF strategies, thematic exposure with these capital markets, emerging trends that are coming. We're going to talk about it all. We're going to get his thoughts on the macro conditions of the markets and also some ETFs to pay attention to that might be worth checking out in this current state of the market. So it's great to have you all here. An investor should carefully consider a fund's investment objective, risks, charges, and expenses before investing. A fund's prospectus and summary prospectus contains this and other information about themes ETFs. And to obtain a fund's prospectus and summary prospectus, visit their website at ThemesETFs.com. A fund's prospectus and summary prospectus should be read carefully before investing. We're super excited, as always, to be working with ThemesETFs. Paul, welcome.
Hey, thanks, Cade. Good to see you again.
Absolutely, man. Absolutely, as always. So I just want to kind of go straight into it. You came on one of our macro spaces on Wolf Bitcoin for the first time. That was fun. Got to talk about the macroeconomic state of the world, I guess you could say. Talked about Bitcoin a little bit, talked about all the things. We'd love to kind of get your thoughts currently where you're standing, how you're seeing these markets, and we'll kind of go from there.
Yeah, I mean, I think like there's a lot of positives in the marketplace, even if we're going to be a bit choppy. You know, people are super reactive to news, and there's a lot of news. And then there's also transition and change with the new Fed chief coming in, and people are trying to predict, how he's actually going to be in practice versus what they've read about him. And so, speculation on, what's going on geopolitically, speculation about what's going on with tariffs, speculation about what's going on with the Fed, and that's driving some volatility in the marketplace. I'm just sort of very pro-US right now, and I also really favor, I would say, the large caps and mega tech. And I know a lot of people have been talking about small caps, but there's a lot of reasons why small caps potentially won't work moving forward. Everybody thinks that you're going to get this low interest rate environment and that it's all going to be great. But there's so much of those businesses that are tied to credit and then refinancing. And I don't think you're going to see interest rates come so far down that they're going to be able to like refinance at such better levels. And so if I'm thinking about the markets moving forward, I think you have to be selective. We talk about this a lot on Spaces, that it's not my idea, it was another speaker's idea, but we've been running with it for the past 3 or 4 months. Look for value in high growth names, and there's plenty of them out there. And then look for themes that have not only 1, 2, or 3 years of opportunity, but 5 and 10 years beyond. And there's several of them because we're going through, not only a technological revolution, but a financial technological revolution. So tons of places that you could play. If you have patience, you can see through the noise and, have high conviction.
Yeah, most definitely. Talk to me a little bit about, so we got some sectors that are probably worth paying more attention to than others. You guys have done a great job at ThemesETFs creating those for people. Maybe it's like a two-pronged question. Where have you found investors want to be interested / wanting ETFs created, things like that? And then also, which ones have you created that you guys are excited about, whether they're single stock ones or if they're like a collage of different stocks in there, or what has been the most exciting ones that you think makes the most sense for people to pay attention to right now?
Well, so on the single stock side, I think old is new. And so we've been seeing a lot of interest and a lot of flows and volume coming into our 2x leveraged Nvidia, NVDG. And the reason we're seeing that, I think, is because, when you look at all the CapEx spend that is happening in 2026 and what's, being guaranteed for the future, the majority of that is going to Nvidia because of how important a player they are in the entire AI tech stack. And so, they've got a really nice chart too. Since November, they've been going sideways and they've been in this really great range. And so I think people are starting to get bullish on Nvidia again because we know the money's going to them. We know they're probably going to have another blowout earnings call. And the chart looks pretty, productive when you think about a potential upside move. So, old is new. I think that's a space where you might want to, consider. On the thematic side, we're seeing a ton of interest in our humanoid robotics ETF. So BOTT, bot. And when we don't like to talk about performance, but I suggest that, the people who are listening to this, go to our website, ThemesETFs.com. Check out bot, because there's a couple of different reasons why I really like this. Number one, I'm super enthusiastic about the humanoid robotics space. It's not just about, what robots are going to do in factories and industries. That does play a role, but it's also about what it does in defense, what it does in everyday life, having humanoid robotics that will be living with us, and about autonomous driving. And it takes all of that into consideration. But what you find in this portfolio is you're getting an investment stream from a lot of names that you don't get in broad portfolios, or you don't get in US centric portfolios. And that's driving returns. Mm-hmm. And so, is Tesla in the portfolio? Yes, but it's not a top 10 holding. Is Nvidia in? Yes, it's one of the top 10 holdings, but it's at the very bottom of the top 10. And you're seeing a lot of names in South Korea, a lot of names in Hong Kong, a lot of names in China, some in Canada, some in Japan. And I think that differentiated return stream is really important when you're putting together an asset allocation strategy. So, and then, like I said, I won't talk about performance, but it's lights out. And all you have to do is go back and take a look at what we're doing year to date, what we've done since inception. I think it's under the radar for a lot of people, and I don't think they put enough focus on that. And I think when they think about robotics, they think about what they read about and see on TV, which is very US centric. There's a lot of this work being done in some great places. Because remember, on the robotics side, a lot of it is about manufacturing. And China, Hong Kong, South Korea, they are really good at manufacturing. So lots of great stuff happening there, and I think people should take a look at that.
Definitely. Wow, that's very interesting. Okay, cool. So have people found, is there any friction there on when they're looking into Asia, or are they sort of just like, hey, that's the money is, that's where the innovation is, let's run it?
Not in that portfolio. I mean, I can tell you that there's a little bit of friction when people think about just investing in Chinese AI alone. So we have a Chinese AI ETF, Dragon, DRGN. And again, really nice return stream, separate from the US AI movement. And every single expert, including Jensen Huang, Lisa Su, and others, have said China is either with us or maybe even a little bit ahead of us when it comes to AI. And we know that they're isolated and they have to build their own. So we've heard from experts in the United States that this is an entirely separate investment stream, and that China is on par, if maybe not even a couple of steps ahead of us in AI, right? So we really like this because all of the names are listed in China on the Hong Kong and Shanghai indexes, and it is an entirely different return stream. I think when you're looking at an ETF and you're looking at a thematic, one of the things that you want to do is make sure that you're not overlapping with your broader indexes. So when you think about bot, you think about Chinese AI, they're two separate investment streams that I think investors could put into their portfolio to be additive. And so we really, really like both of those names. When you talk about a little pushback, some people are not interested in investing in China.
Right.
That's your preference. So again, going back to what I always say to you, have high conviction in the theme or the sector, then be comfortable where they're investing.
Yep.
And then, stay with it. Don't listen to all the noise if you have that high conviction.
And I'm also curious, for people who are becoming investors, maybe if you could speak to a little bit, I guess depending on how many podcasts they've watched of us together. Some people are pretty well versed now into the discussion around ETFs. Some people still look at ETFs and they think, oh, that's that thing you buy where it just has everything in it, and you buy it once, you don't manage it. Talk to me a little bit about how you guys work and how you guys do these ETFs.
Yeah, so we work mostly passive. Of the 17 thematic and sector-based strategies that we have, 16 of them are passive strategies. The other one, which is a globally systemically important bank ETF, is the only active strategy. But again, it's because it only takes in GSIBs, and that's selected by the Financial Stability Board and Basel III. So we don't have any active management of it. We just go off of what they select as globally systemically important. But that said, when you think about selecting a passive strategy, we want to make sure that we're constructing the index with our index provider so that it's cost effective, number one, and number two, that it's a pure play in the space. So if you look at humanoid robotics, we're going to give you that humanoid robotics play, not the popular names, that you hear on TV, but the ones that are really driving that theme or that sector. When you think about other areas, we want to make sure it's a pure play, diversified enough so that it helps mitigate risk, but not overly diversified so that you're not getting that pure play on that theme or on that sector. And then last but not least, we want to make sure that it's low cost, because we know that investment returns can be hit quite considerably with high management fees over time. And we want to make sure that we don't erode your investment returns with management fees. So we are some of the lowest cost, if not the lowest, thematic and sector-based ETFs on the street.
Very cool. Yeah, I think that's a distinction worth making. There was also like the famous Michael Burry moment a little while ago where he was getting out of the market. He was not loving what he was seeing in AI. It's been a little bit of time now. Markets kind of made some moves. Do you have any thoughts on, like, I remember when that first happened, people were kind of like scratching their head. They were like, I guess, yeah, it's possible. They were a bit nervous. Now it's been a little bit of time since then. Do you have any updated thoughts? Like, where do you sit at with this whole thing? People calling for the top. They say it's over. You got to get out now.
I think you got to buy every dip, especially in certain sectors. And again, with certain names. But be more diligent about what names you're selecting. That's number one if you're doing individual stock selection. But again, if Nvidia were to drop, $30 tomorrow, I'd be buying more of it. I'd be doing whatever I could to get more money to buy more of it, because the growth story is there and it's such an integral part of this AI movement. AI is not going away. Crypto is not going away. The tokenization of assets is not going away. Humanoid robotics is not going away. So I don't know, like, why is anybody so fearful of the market? And why is anybody listening to like one or two people who say things just to be provocative, just to get their name in the paper, that have only been right really once? And I know he was right in a major way. Okay. And he got, really lucky because, again, there were a lot of people who were calling for the demise of the housing market during that period of time. Right. Very few timed it right. And that's where I come full circle on this. Trying to time the top and trying to time the bottom is nearly impossible. Okay. So if you want to play that game, go for it. Like, I'm not good at it. I can never pick the bottom. I can never pick the top. I've been in, probably about 10 conversations about the market and the economy this week. And people are telling me, well, I thought Bitcoin was going to go to 250, but then I changed my thesis. And now I think it's going to 40. And I'm like, well, it didn't go to 250 and it's probably not going to 40 either. So what are you going to do? Yeah. And if it goes to 40, it could go to 30. If it goes to 30, it could go to 20. If it doesn't go to 40, it may go back to 80, 30, 90, and then up. So and I asked him, I said, let me ask you a question. Is your long-term thesis that it's going to 250? And he said, oh, yes, I do believe it's going to get to new highs, and I do believe it'll hit 250. I said, so why are you worried about how low it's going to go? Because you want to look on paper and show people how much money you have? Like, I can't predict when it gets to 250. I can't predict when it gets to $1 million. And I can't predict if it's going to go back down to 20. You got to have high conviction on where you're at. Yeah. And you've got to make sure that you're comfortable with paper losses when the market doesn't go your way, because you have that high conviction. And that's what I would say in any of these markets. So pick your spaces, pick how you want to invest, have high conviction, and don't worry about the noise. Even in software, okay? I'm gonna even go out there on software, right? Software is taking a beat down because a bunch of analysts and a bunch of people on TV ran with a story that AI is going to take over all software. Yep. I highly doubt it. I highly doubt it. I don't think that's going to happen. And, I talked about this for a lot of different reasons, especially like in cybersecurity. It's like, do you really think companies are going to take on the responsibility for their own cybersecurity? Like, you got to be kidding me. That's like asking the government to do it. Like, yeah, why in the world would they do that? You have to have a guard on the watch that is coordinating all of these cyber attacks. And the benefit is to have somebody that's working with multiple companies all over the place, because they have the benefit of scale and the benefit of data and the benefit of intelligence. You don't want to do it by yourself. And so even if you can, even if there's some free app that's out there, do you really think a company like JP Morgan is going to use a free app for their cybersecurity? Do you really think Delta Airlines is going to use an app, a free app for the, do you think Amazon is going to? No, of course they're not going to do that. So, and while you could always build it yourself, let's say you build it yourself, and a year in, you have a major fail. Who's to blame at that point?
Damn.
You are.
Somebody to call.
Customers will be pointing the finger at you.
Yeah. Wow.
And so where there's liability, I think, people are going to outsource that to the major players in the space that are going to be doing it. And again, even agentic and all this stuff, everybody says it's going away. I see lots of opportunity in those spaces if you could be patient and you could think about the long term. I don't think companies like Oracle are on the brink of their demise. I don't think companies like ServiceNow are on the brink of their demise, or Palo Alto. You might get some good opportunities in those spaces. And again, if you want to, and you diversify your risk a little bit, we have a portfolio spam. It has 36 names in it. And even throughout this whole downturn in software, it's only down about 2 and change year to date. So you're getting just enough diversification to manage your risk on the downside, and you're going to get that upside return once the market returns. And that's in the cybersecurity space, SPAM.
Very cool. Very cool. Yeah. No, that's actually a really good point there as well. I'm like are they gonna take on that accountability? That's an interesting way. I had not really thought about it like that. Switch change a little bit. So there are certain stocks that are correlated, fortunately or unfortunately, depending on the market, to especially the crypto industry, like Coinbase, even Robinhood. Stepped its toes deeper into crypto. I'm not exactly sure how much it's affected it, but some of those stocks haven't performed nearly as well. Crypto obviously has performed great the last few months. Any thoughts on that sector, especially the stocks that are tied to that sector?
I think you got to look at the correlation market and how important it is to that actual individual security. And sorry to cut you off there. I thought you were. And when you think about like Robinhood, I don't think Robinhood was down because crypto's down. I think Robinhood was down because their monthly active users were down. And so like that was a mess, and the revenue was off, right? When I look at Coinbase, again, what's my time horizon on Coinbase, and how do I think investors are going to react? Maybe Coinbase has been beaten up enough because it's going to be hard for them to come out with like a killer print, today when they report, because there's so much that's happened in the crypto space. Yep. But I think you might have seen the move. So what we've noticed is with a lot of like crypto tied companies, MicroStrategy included, the beatdown has already happened. Robinhood's issue was not a crypto issue. That did come down with crypto, but then they didn't hit, right? So let's see what the monthly average users are for Coinbase. Let's see what trading volumes are like. Let's see what all that other stuff is. What you might see is an upside surprise, the same way you saw it with MicroStrategy when after their conference call, the next day it took a big pop, right? Because I think people felt more secure in the business model and their credit structure and their ability to survive a great downturn in crypto. And so maybe people are so bearish on Coinbase that the move is already in. And if they could just deliver operationally the way that MicroStrategy presented, maybe you see a little pop from there, because the stock has really gotten beat down.
Yes.
It's hard to predict. And I would tell people, if you believe that Coinbase is a platform of the future, you don't have to time the earnings call. So just be cautious, right? Like, you might want to see how this thing plays out, because if it goes the way of a Robinhood, you may be able to get in at a better entry point. And if it doesn't, and things are good, once crypto returns, once all these, altcoins return, there should be a bright future for Coinbase, and you're not going to miss the overall move.
No, that makes sense. On Themes ETFs. So like, I'm not sure if you know off the top of your head which one, because it may change in there, but what are your most popular ETFs, and why do you think that is?
So one is NATO, which is the Themes Transatlantic Defense ETF.
Yeah.
And it's pretty easy to see why. I mean, we have so much geopolitical risk around the world. We always say invest to where the money's going. And national events is a place that money goes to all the time, especially in times like we're in today. It's comprised of aerospace and defense companies within NATO member countries, specifically, again, a pure play. So we don't add a lot of tech into it. And that return stream is great because most of these companies are prime contractors to the governments. What does that mean? When that money gets designated out of the budgets and it's going to be spent, it mostly goes to the prime contractors. And so, you just saw Lockheed Martin announce a couple of weeks ago that they tripled their contract with the U.S. for missile defense, right? And so that's where the money goes. It goes to those large companies. And because there's a mandate for NATO member countries to increase their spend on defense and to, be more independent when it comes to their military and defense, that is driving this theme and this sector. And so really, really positive sector. We see a lot of interest from both advisors in the retail market. The fund is growing substantially and continues to get interest. And we think it's a theme that's going to continue well out into the future. So that's one place that we see, a massive amount of demand. Our GSIB fund too, globally systemically important banks. I mentioned it early. We're entering into times where people are nervous, anxious, don't really know. And I know that the financials got hit a little bit the other day, but it's still an amazing space. And not only is it an amazing space simply because they are a foundational part of all of this growth that happens around the world. They have the largest deposits, so less interest rate sensitive. They're interconnected. And, God forbid something were to happen in the market or there's some kind of shock or even some kind of recession or worse, they're deemed globally systemic for a reason. That's because governments are going to come in and back them. So there's less risk there. And so we really like the largest financial institutions in the world. Also, just what I was talking about before with the tokenization of all assets. When you think about a company like Tether, and this comes directly from Tom Lee, some people like him, some people don't, but he makes a lot of great points. He talks about how profitable Tether is with 300 employees, and it's because they are part of the digital banking system. All of these large global banks are moving that way. So think about all the efficiencies that they're going to create and how they could turn that into, revenues and then earnings and profits. Once they put that into full scale, we think they get a much higher multiple and a better valuation. And so, again, we don't just think about for the year, 2 years, 3 years. When we create these themes, we want, I don't want to say things are evergreen. Nothing in life is evergreen, including me or you, right? But we like things that have long runways. And we think financials, not only with the way their current business structure is set up, but where they're taking it.
That's very, okay. I was going to say that's very well said. The last thing I was going to ask was literally going to be your advice for investors out there, especially new ones. But I think honestly that last line may have been as clear as it needed to be for investors. Like especially the way you weight your portfolio, you want to have some that are probably a bit shorter. You're like, hey, this might be a sector worth investing in. It might be a pop here soon. But also you're like, hey, this is going to be good in 5 years. It's going to be great in 5 years. I need to get in early now. It doesn't even matter at this price point.
Yeah, my advice would be this, like separate your buckets, because we all have that little thing in us that says, hey, I want to take a bet here, right? Like,
exactly.
That's a trading bucket. That's your trading bucket, right? Yeah. Like, I'm going to go for this and understand what your risk tolerance is, put some rules in place for, how much you want to lose and make sure you set up for that. Really? What's a good enough return if you do hit the trade? Like, don't be too greedy, right? So that's one bucket, the trading bucket. I think the second bucket is your investment bucket. Like, where's your high conviction, right? Like, how convinced are you about this? And when you're very convinced about something, which I think you should be, okay? Like, if you're going to invest for the long term, you've got to be convinced. Like, don't yeah, I'm going to show my age here, but it's a Public Enemy song. Like, don't believe the hype, right? Like, there's a lot of hype now in markets, and a lot of people that have opinions, and they cloud your judgment, and they're there to draw your emotion out of it, right? Like, don't let them. If you got high conviction and you've done your homework, like, go for it. Like stick to it. Dollar cost average down, and then it's something systemic happens. Like, again, I'm big on Nvidia. I'll give you an example. I'm big on Nvidia. If next earnings period, all of the hyperscalers say we're cutting our CapEx spend in half, I'm out. You know what I mean? Because now I know the investment's not going there.
Yeah.
So, or if something systemic would happen, that would tell me, all right, reevaluate, right?
Sure.
So that, and then I love this, and I said this already on the podcast, but I'm going to say it again because it's come from the Wolf Streams and the Wolf Network. Look right now for value in growth names. There's a ton of growth out there, okay? And there's a lot of things that are like have low valuations right now because they've gotten beat up.
Right.
Look for growth names at a value price. They're out there. Be more specific. So that would be my 3 keys, for people that are thinking about investing right now.
Beautiful. Well, Paul, thanks so much for coming on. And for everyone who's listening, if you enjoyed yourself and you learned something, definitely be sure to follow them right above, or we'll have them tagged on X. And if you want to find out more information about them, go to the link down below. That'll take you to their site. And Paul, we'll hope to have you back again. I always love speaking with you. I always learn something. It's great to have you in the spaces and the streams now. I hope you have an amazing day. And if there's any last things you want to throw in there.
No, I mean, it's just next time we do this in the winter, I hope I get the invite to come down to Miami.
Yes, indeed. It will happen. It will happen. I need to go back to New York. You're right. I need to check out that side of the country again. Everyone back at home in the Wolf Squad, thank you all so much for tuning in. And I'll see you guys all in the next one.